and good evening, friends. 17th April 2019, all taxpayers involved in this trade were comfortably disappointed with the policy provision in Section 17.5. Section 17.5 is a provision that says whether or not any goods and services are used in the business, input credit on them will not be allowed. This is not something that augurs well with the understanding and the expectation that we all had about GST law. But this is a prerogative of the government to promulgate a law with restrictions as it sees fit. Everyone were at peace about this because no special treatment to anybody. 17th April 2019, out of the dark gray sky came a ray of hope from Honorable High Court of Orissa in a decision that upset a lot of understanding of the past about how two clauses in 17.5, that's clause C and clause D, were to be understood. Mind you, friends, I'm not going to take you through the High Court judgment and the Supreme Court judgment. I'm sure all participants have spent hours poring through the pages of the High Court decision and the Supreme Court decision. I want to bring to you this evening what was the understanding prior to the High Court decision, subsequent to the High Court decision, and how that has been addressed by the Supreme Court decision. Before the High Court, the question was only regarding clause D. There was no discussion before the High Court as to the applicability and the scope and the restrictions and the limits of clause C to section 17.5. High Court, after evaluating the views offered from both sides, came to a swift conclusion in para 19 of the judgment to say that input tax credit in respect of goods and services received for the construction of an immovable property will be allowable. If you see the ratio in the High Court decision, the court went into appreciating the economics behind the law. It's one thing to interpret law. It's one thing to bring the economics behind a statutory provision. There was great cheer about the High Court decision, and all who had given up on credits for constructing an immovable property, which is for letting out, started to evaluate the feasibility of claiming credit. Now, mind you, many did not rely on this decision. They chose to wait it out to see how this will unfold. Those who claimed credits were identified and notices were issued. But the limitation as to how many taxpayers can be pursued to and how many notices can be issued. So when the High Court decision came and sort of the dust settled, there was the trade was divided into two groups. The vast majority did not claim credit, and some decided to weather the storm that is to come and take those credits. Some utilized it, some did not utilize it, left it as unutilized. A variety of wise suggestions were doing the rounds back then based on past experience, but not necessarily founded in any specific provision in GST law, hoping to see that the economics versus law debate will lean in favor of taxpayers. Then in 2023, SLP was admitted in Supreme Court, but stay from operation of this order was interestingly not granted by Supreme Court. Now, October 3rd, 2024, Supreme Court rendered its decision, two-member decision. The wisdom of Supreme Court is praiseworthy at this time for the following reasons. First, Supreme Court examined the claims of both sides and identified that the interpretation of law and the tax treatment to be applied is purely based on facts. It is a fact-based outcome. And the wisdom of the court is forthcoming here, where the court said, questions of fact we will not go into. If you see para 24 of the Supreme Court judgment, they said the questions they identified, they took upon themselves to answer three questions. It's listed in para 24. And if you look at para 65, they have summarized the conclusions of this 91-page judgment. They took upon themselves to answer questions of law, questions of interpretation. We'll examine those questions and we'll come to those to understand those answers. What is not in this judgment is important for us to examine, because we now have to go from here and implement what we understand and take a stand. Because GST being a self-assessment based tax regime, it is for the taxpayer to take a position based on one's own interpretation of the law and then decide whether they want to claim credit or not. Very quickly, the debate moves on to examine what is immovable property. And today, what's on everyone's mind is a building an immovable property? Is a building an immovable property? Friends, after a lot of evaluation, we will come to some understanding. And if you see, Honorable Supreme Court also has taken pains to evaluate various decisions about cinema theater, a power generating unit, a hotel, so on and so forth. They have surveyed a number of judgments, largely borrowed from the income tax jurisprudence in the context of claiming revenue expenditure, claiming depreciation under Section 32 of income tax law, and so on, to illuminate our understanding as far as GST is concerned. Friends, let me pause here and bring one point for your consideration. Expenditure is admissible under income tax law does not automatically mean that inward supply, the inward supply corresponding with that expenditure is eligible for input tax credit. This is something, it's a basic premise. That's the foundation on which we are to construct. There is a divergence of the statutory provisions. While Section 16(1) of GST law very clearly says if it is used in the course or furtherance of business, input tax credit is admissible, there are carve-outs. Section 17(5) is one carve-out to say that in the following cases, notwithstanding whatever it may be, credit is not admissible. So please entertain this divergence in the statutory language. So therefore, everything we read in income tax law cannot be bodily lifted and planted in GST law as if it is an authoritative pronouncement. And that also has been cautioned by the Honorable Supreme Court in this decision. Now, what is immovable property? What is plant and machinery? Let's quickly go into it. We have just an hour and we have to discuss about where do we go from here. Taxmann has published a very interesting publication on GST and allied laws, besides its vast array of other publications on transfer property law. And in this publication, there are some examples you will find from 315 onwards. You will find some examples. I'll give you a few examples to present for your consideration. What is immovable property? A hut is an immovable property, but an ATM machine is not immovable property. A tree laden with fruits, Marshall versus Green said, is movable property. Grass growing things which are attached to the earth but agreed to be severed are also movable property in GST even. So therefore, immovable property is defined in a divergent manner depending on the context in which it is understood. In central excise days, there were very strong views expressed by trade to deny that the plant and machinery that has been installed or erected is liable to excise duty at all, because the argument back then was plant and machinery is immovable property, therefore it is not liable to excise duty. Today, the same thing is working against the trade when we say that if you argue that it is immovable property, then you are hit by the bar in 17.5 C and D. But if you don't say it's a bar, if you don't say it's immovable property, then you are possibly out of the restriction here. So what is immovable property? Diverse views. Each context, fact-based decision needs to be taken. But if we have to understand renting property constructed for letting out, is it an immovable property or not? Let's examine this from the point of view of, is it the means of production or is it the place where production takes place? I would present for you to please consider means versus place test. Is it the means of production? Is it the place of production? Place of production is passive asset. Means of production is active asset. If it is active asset, even if it is immovable, it is not hit by the bar. If it is passive, it is hit by the bar. If it is active, it is not hit by the bar. This is what I want to go out on a limb and offer for you to please consider. But it doesn't make sense that even though we use it for business, credit is being blocked. Now, this is a disappointment of a taxpayer, which we can all understand. But what we have to deal with is not how to please the taxpayer, but we have to read with how the law reads. The law very clearly says, if it is an immovable property that is constructed, credit is blocked. The carve out is if such immovable property is plant and machinery, plant or machinery, we will go into that aspect. Is it plant and or machinery is what has to be examined. Now, those involved in the trade of letting out property, it's not very difficult to answer this question, whether it is the means or the place. It is to accept the answer that comes to mind where the difficulty is. It is the per square feet impact of claiming credit or not claiming credit that can be burdensome, that will compel us to look for ways how to claim this credit instead of going with what answer comes to mind when we apply this means versus place test. We'll come to that aspect also in a moment. As regards what is the carve out, we find that after having surveyed various judgments, the court came to the conclusion that functionality test may be applied. Please bear in mind, functionality test was not invented by this decision. This court surveyed various authorities and derived from those authorities this functionality test to say that if you want to find out whether something is a plant and or machinery, please go and apply these tests to come to the conclusion. Mind you, court did not give an answer on facts. In its wisdom, chose to answer questions of law and relegated the respondents in this SLP to find out what the fact is in each case. Now, if you examine Clause C and Clause D, it talks about works contract supplied. Clause C is works contract supplied. For a further works contract, there is no bar on credit. If the inward is a works contract and the outward is a works contract, there is no bar on credit. If the inward is a works contract and the outward is not a works contract, then there is an absolute bar on the credit, except for the carve out. Clause D, if the inward are goods and services received. Inward is goods and services. Outward is, if you identify, outward does not specify it is to be renting. If renting was specified as a carve out, then it would have been slammed down. What this provision very clearly says, if the inward are goods and services, you are hit by the bar. Now, when we read any judgment, I'm sure we will go into reading arguments of taxpayer and arguments of revenue. Friends, please be very careful when you're reading a judgment. we should not assume that the arguments of both sides recorded in the judgment belong to the court. There is a portion where the court goes into discussing the arguments placed by both sides. So therefore, as you're reading, it seems like very encouraging to see what arguments have been placed by the taxpayer. Friends, if you see the High Court judgment, taxpayer, and rightly so, taxpayer threw everything at the court. Concept, law, logic, economics, historical legislations, contemporary exposition, they threw everything at it, and rightly so. But the wisdom is shining through to say that everything that was argued was not readily entertained. It was evaluated, discussed to come to certain conclusions. But what is interesting in the Supreme Court's decision is for us to pay special attention to arguments for the state. The government argued. Please bear in mind, when the government argues something, government does not argue lightly. Government does not argue something that it has now come up with. Government is only presenting its understanding, its reading of the law. It's not that the government will also throw everything at the court to prevail over the court. Taxpayer is at liberty to throw everything at the all arguments, try everything. You never know which one will stick. You never know which one will convince the court. In para 16, among other things, in para 16, two things the government argued which is of great interest. One, they said there is a drafting error. Where the court did not accept that it was a drafting error, but the government said there's a drafting error. Now let's see what happens. If there was in fact a drafting error, can that error be corrected retrospectively? In GST, do you know if there is any instance where the government has retrospectively amended this law? Last 7 years? You know the answer. If there was in fact a drafting error, what holds the government back from correcting its own error? In its wisdom, in its humility, in its willingness to do what's right, in its willingness to implement the policy thinking, is it not possible for the government to amend the law to correct an error that it has offered as an explanation for the differences in the language used? Second, the government offered a very interesting explanation. Para 16 clause D, it says there is a dividing line. Friends, I'll read for you clause C, and then I will take you through what is this dividing line. Goods or services or both received by a taxable person for construction of an immovable property, I'll leave what's in the brackets, on his own account, including goods or services or both, including when such goods or services or both are used in the course or furtherance of business. Whether or not it is used for business, I don't care, you will not get credit. Let me read this again for you. Goods or services or both received by a taxable person for construction of an immovable property on his own account, including when such goods or services or both are used in the course or furtherance of business. Whether it is for business, whether it is not for business, I don't care. You will not get credit on goods or services received by a taxable person for construction of an immovable property on his own account. 16D talks about a dividing line. What is the dividing line? Let me also offer this for you to please consider. Remember the means versus place test. Next, the differentiation. Second, please consider receiving goods and services into the construction site and completing the building for letting out to tenants. Ask yourself if this is one continuous transaction or is it two separate transactions with a dividing line. What is the dividing line? The date of completion of construction, the date of execution of conveyance deed, the date when the title is vested in the owner of the premises. If we say it's a continuous transaction, please bear in mind the continuous unbroken transaction is not affected just because agreement to lease is entered into prior to completion. As you know, 54 of transfer of property law very clearly says holders of agreements have no interest in the property. So therefore, this agreement at present of a property to come into existence in future is not at all a contract. It is merely a promise in present to contract in future. Therefore, ask yourself the second question: is receiving cement, steel, etc., into the project site and letting out for rent, is it a continuous, unbroken transaction, or is there a break? Is there a point when the property comes into existence which can lawfully become the subject matter of a transfer by way of lease under 105 of transfer of property law? Friends, please bear in mind, if we don't see a large interval of time between completion of construction and letting out, does not mean that it is continuous. Continuity requires an inextricable nexus. Without letting out, the construction itself would not have come into existence. Is that true in any particular case? The motivation for construction may be to let it out. You know how many properties are there that have been constructed with a motivation of letting out, but sadly no tenant came. So therefore, the title to the property does not get disturbed. Please examine the second consideration. Is it a continuous transaction or a disjointed? At the time of completion of the property, the construction is complete, title is conferred onto the owner, and who then lets it out to the tenant is the next question. If you evaluate this, I think the answer is obvious. Everybody knows what should we do with 17.5C, what we should do with 17.5D, but now we are trying to explore possibilities as to what else we can do. Before we go into what next, we'll quickly answer the question of and versus or, plant and machinery, plant or machinery. Plant and machinery means it is one thing, plant and machinery. Plant or machinery means it can be plant, it can be machinery. What is machinery? Need not be plant. What is plant? Need not be machinery. And all the authorities on this distinction will be brought to bear. And if we examine, we'll find even more interesting decisions to say and should be read as or in a context, or should be read as and in a context. But here we have an authoritative pronouncement. Supreme Court says in 17.5C and 17.5D, the carve-outs are deliberate. In clause C, it says and. In clause D, it says or. We don't accept the argument that it is a drafting error. Drafting error or no, will the meaning change? Will the meaning become any different for a taxpayer to argue on whether it is this and versus or debate? Whether the taxpayer, by entering into the and versus or debate, what will come out for the taxpayer to claim? Next, when you evaluate, when is an immovable property complete? When is an immovable property complete? An immovable property is complete only when it is constructed in accordance with the applicable bylaws and the sanction. Sanction is granted based on the plan that was presented by the taxpayer. If the taxpayer presented that various post-construction installations are also part of the design, then the building will be complete with those installations. But if the taxpayer were to present a plan that the building is complete without several installations, then the building is complete according to the plan presented, provided it conforms to the bylaws. For an example, a high-rise building plan is presented without a lift. The bylaws don't permit putting up a high-rise without a lift. So therefore, lift, even if it is installed after completion, it is essential to derive the identity of the building. Therefore, it is part of the building. In fact, such a plan would never be approved, but this is just for arguments. But if a building plan is presented with certain installations, meeting the requirements of the bylaws, but the taxpayer in his own self-interest decides to invest substantial amount of money in addition to, over and above the requirements of the approved plan, he is welcome to detach that from the capitalization of the building. So therefore, all the advanced rulings that have not allowed input tax credit on various installations to the building, etc., will have to make way. But except those applicants, all other taxpayers are welcome to deviate from those rulings. So therefore, if you consider how we have to evaluate going forward, let me offer the following possibilities for you to consider. We'll take an instance where somebody has claimed credit, what I've been calling safari credits that are hit by this decision, by this restriction in 17(5)(c) and D, relying on the High Court decision. Taxpayers have claimed credit. Taxpayers who have already claimed credit can fall into three buckets: those who have claimed and utilized, those who have claimed but not utilized, those who have claimed but reversed temporarily. Now, temporary reversal came in only in 2022. In the past, how did someone reverse it temporarily? There was a field dealing with Rule 37. For lack of a more applicable and relevant rule to make temporary reversals, there are taxpayers who have reversed it under Rule 37. Because 6H can be reclaimed back. Rule 37, to recover what was reversed, there is no time limit. To claim the credit first time, there was a restriction in 16(4). So therefore, three buckets of taxpayers: those who claimed and utilized, those who claimed and did not utilize, those who claimed and reversed temporarily. All these taxpayers are saved by limitation under 74. No extended period of limitation can be invoked to recover. All of them will be pursued. How, I don't know, but all of them are eligible to be pursued. Wherever there is a divergent view on interpretation of a law, and that divergent view is bona fide, that means this group of taxpayers who have claimed credit, some utilized, some reversed, some did not reverse, some reversed, these taxpayers have entertained a view that construction credits are admissible. Their view is not impossible, because their view is shared by no less than a High Court. Because Supreme Court does not affirmatively declare that the credit is admissible. Supreme Court very clearly says it depends on facts. What those facts are, Court has given us a rule to apply and come to the answer. It has not given us the answer itself. Whenever a bona fide view is taken, extended period of limitation cannot be invoked. 1053/2017, circular issued under the earlier law, which NKAS Services of Jharkhand High Court says mutatis mutandis applies to GST. Such taxpayers cannot be pursued under 74. So therefore, those who have taken credit already are one group. If any notices are issued, they can only be issued under 73. If notices are already issued under 73 or 74, it will be dealt with the way government believes is the right way to deal with this. The next group of people are those who have not taken credit. The not taken credit category are also three categories: those who have not taken any credit at all, those who have not taken any credit at all because they have calculated offline what is eligible credit and taken only that much credit. Next group of people are those who have taken that credit and reversed. Even prior to 2022, they have taken all admissible credits, reversed what is inadmissible in order to be prudent about their compliances with law based on the understanding as it then existed. The third category of people are those who have taken credits and reversed it under 4B2. The amendment came in from August 22. So for the period 21-22, the last date to claim credit was 30th November 22. Then 30th November 23, 30th November 24 is around the corner. So therefore, there are a lot of taxpayers who have taken credit and reversed it temporarily, awaiting the outcome of this decision. Here, let me pause and bring this point for your consideration. If any credit has been taken today, if you reverse this credit, there is a risk that it might be regarded as prior period expenditure, but I will not say that this is the final word on that. It is for you to please consider whether you can write off credit today, which does not belong to inward supplies of this year. If you charge it off, is there a risk of credit being the write-off being treated as a prior period? Second, those who have not taken credit, the ones who have either not taken credit at all or the ones who have taken credit and reversed to be prudent about their compliances, can they now write back their expenditure and avail credits today? Yes and no, for two reasons. Yes, they can write back subject to 16.4. Yes, they can write back subject to 16.4, point number one. Point number two, subject to your analysis of prior period disallowance. Subject to that, you can take back credits, but you can't go back to 17-18. You can go back only as far as you can go back. The category who can't take credit is up to August returns diligently, entire credit is taken, appearing in 2B and reversed as a permanent reversal under 4B1. Anyone who has made a permanent reversal is now not in a position to go back and re-avail those credits. But there will be some adventurous enthusiasts who will want to see how they can go back and take credits from 17-18. So out of sheer respect to offer them an answer, I will hazard the following answer. If credit is claimed in 2024 relating to a period hit by 16.4, 3B credits will be more than 2B balance. Rule 88C will kick in. System generated notice will automatically be generated and issued. Within 7 days, an answer needs to be given. And if the answer is not satisfactory, 83C3 says show cause notice under 73 or 74 needs to be issued. Today, if somebody tries to take advantage and claim credits from the past, is this hit by 74 or 73? Please bear in mind, friends, demand where the cause of action starts in 24-25, notice has to be issued under 74A, not 74. So therefore, even if today DRC1C were to be issued, show cause notice cannot be issued under 73 or 74. We'll have to wait for the law to come in under 74A, and then we'll have to see what will be the outcome. So therefore, please consider each person has to evaluate whether each taxpayer has to evaluate which of the two baskets do we fall under and accordingly make a decision. For tax professionals, please consider it's not possible to write an article, put up a flow chart and say yes, no, decision box. If you're here, go here. If you're there, go here. It may not be something that is so simple. For the reason that this decision has answered questions of law, this decision has not answered questions of fact. Now we will come to carve-out. What is the carve-out? If it is plant and or machinery, you got it. If it is plant and or machinery, you have to defend that it is plant and or machinery. It is not something that can be readily answered whether it is plant and or machinery by looking at the structure, looking at the contract. One has to apply what court in its wisdom has very succinctly captured the authorities of the past and said functionality test. Do we know how to apply the functionality test? Please go back to Quality Steel Tubes, Hyderabad Race Club, Mittal Engineering, Triveni Engineering, Sirpur Paper Mills also in favor of revenue. All those authorities, there used to be circulars in central excise to say how we can evaluate whether it is still goods or not. Friends, please bear in mind, in each case, we'll have to evaluate. My reading is as follows. Construction for letting out is a passive asset. Construction for letting out is a passive asset. It is a place where supply takes place. It is not the means. Therefore, we will have to examine what is going on. Reason why we have to say this is, what is good for the goose must be good for the gander. If you let it out and you're eligible for credit, if you use it as a factory building, why will you not be allowed credit? If you use it as a factory, isn't it construction on own account? If construction of a factory is on own account, because on completion of construction, title is conferred, on letting out of a property, why is it any less own account? Are we saying there is no conveyance deed? There is no vesting of title? Is construction to letting out unbroken single transaction, or there are two transactions? Friends, therefore, if we have to apply these tests, my reading of the provision is very simple, that if it is the means of making supplies, you're entitled to credit. If it is not, and it is a passive asset, you're well placed not to claim these credits. Now we will go into the adventurous mode. If you do want to take credits, notwithstanding what is likely to happen, first calculate whether you are group A or group B. What is group A? Group A are those taxpayers who have already taken credit, whether utilized or whether unutilized, or whether reversed temporarily. Group B, those who never claim credit, those who claim credit and made permanent reversals, those who claim credit and parked it under temporary reversals. Friends, first we have to identify whether you are group A or group B. Then we have to examine whether it is defendable as plant and machinery, or we can argue that it is not an immovable property. You understand? If it is plant and or machinery, we have to see, based on what the court calls functionality test, to come to some cogent reasons. Ultimately, there's no fun in claiming credit only to reverse it with interest and penalty tomorrow. Ultimately, managements want information that is decision worthy. You can make decisions out of this information. If you say it is plant and machinery, apply some tests. Examine what is the basis on which you will come to this conclusion. Some of the decisions the court has evaluated can be considered just to examine what's going on. Taj Mahal Hotels, Anand Theatres, Karnataka Power. If you see how the court finally evaluated, the court came to the conclusion that it is not possible to give a one-size-fits-all answer. Having surveyed all those authorities, court came to the conclusion that it is not possible to render a one-size-fits-all answer. Therefore, in paragraph 56, they relegated the respondents to go back to High Court. Even Safari had to retreat and go back to High Court and get that evaluation done. But let me ask this question. What is the functionality test that remains to be administered when you are looking at a mall? What will they go back to High Court and ask the court? What new material can they offer to court beyond what is already available in the reported judgments to say that they purchased cement, steel, etc., and constructed a mall, which was let out to various tenants? But that is for that person to deal with. But for us, we have to evaluate first group A, group B. Second, plant and or machinery category, or not an immovable property test. For plant and or machinery, please examine what is the test to be applied, if we can apply any tests. To argue that it is not immovable property, it's a hard sell, but we have to examine. Merely because something is affixed does not automatically make it immovable property. There are various authorities to explain this. There are good judgments and not so good judgments to provide the jurisprudence on this, but I will leave it for you to evaluate. On the short point of whether immovable property, construction of a building for letting out, whether we can now go back and take credits of the past. Please make that decision with adequate expert advice, with sufficient granular details of the facts to examine what needs to be done, so that you are prepared. You enter into this territory with your eyes open. I understand it's easy to say don't take credit, but the commercial implications of this decision are so profound that out of respect for that commercial implication, I would only offer these tests for you to please consider whether you should or should not claim credit. If one were to take credit, please evaluate. Again, there are two possibilities. GST Council is set to have a meeting very soon in the month of November. November is also the last date to claim credit. So we have some moving parts here to sort of get our hands around to see how we will evaluate what decision to make. The safest, I would say, would be to defer October returns until the council meeting comes around and we get to hear. Today I saw in some press release that the government is evaluating whether to seek a review of this decision. If the decision goes into review, council may not even take it up in agenda. If review does not, the government does not proceed with the review, or the review very quickly gets addressed by the court, possibility for council to take this matter up, subject of course to the procedures of how council functions. It's not like it's easy for someone to include a matter in the agenda without much contemplation and discussion. But there's a possibility that something may come out in the upcoming meeting. Government also, in its wisdom, can issue some clarification as to how government proposes to address this issue. Mind you, there is a vast segment of taxpayers in the country who have not taken credit. Vast segment of taxpayers who are Group B, happily reversed everything, complying with the law, not bothered about any notice inquiry, who have not taken any credit. The vast majority of those taxpayers who will be greatly wronged if the decision were to go the Orissa High Court way. Therefore, the government in its wisdom will address concerns, because every taxpayer is important. Every taxpayer's contribution is valuable in nation building. What is it that the government is thinking? We get to know from para 16 of this judgment. Government has said, among other things, government said two things. One, there is a drafting error. In all sincerity, in all seriousness, government made this most self-deprecating and humble submission before court that there is a drafting error. We have to respect that. Second, government also said that there is a dividing line about which we have discussed: continuous transaction from purchase of cement to letting out, or a broken transaction where there are two transactions occurring in series, but there's a very clear dividing line as the government presented in para 16D of this judgment. If you evaluate this, I think the answer will be very clear. It's for those who are risk takers. It's for those who are risk takers to claim credit. For those who are risk averse, maintain status quo, not take credit, file returns, be diligent about filing these returns, claiming credits where it is admissible, not claiming credits where it is not admissible. 17C, 17.5C and 17.5D are at the pith of this entire dispute. 17.5C was never considered by High Court. 17.5C came up for consideration directly before the Supreme Court. Supreme Court said, 17.5C, we have nothing to say about as to the working of it. 17.5D, they went into examining and or debate. Therefore, what happened? If works contract services are received, mind you, this is the important part of this evening's conversation. If works contract services are received for constructing an immovable property, you are hit by 17.5C. If goods and services are received, you are hit by clause D. Now, please evaluate the construct of 17.5C and D. Most construction of immovable property is by way of works contract. Very seldom construction is by way of buying goods and availing services and labor to construct the immovable property. So I will only present this for you to please evaluate. The language is very clear. The court has examined the law involved in these two provisions and took upon itself to answer three questions. First, plant this and or debate, is it valid or not? If or should be read as and? Is it permissible based on the available jurisprudence? Lastly, 17.5c and d restriction, is it constitutionally valid? Court came to the conclusion that such a restriction is constitutionally valid. This is very significant because what the court rendered in the context of 17.5c and d applies to the whole of 17.5, all other clauses also. So they held the restriction is not absolute and total. The restriction is subject to the applicability in 17.5 and said such a restriction is valid. Therefore, when sending the parties back to High Court to get the facts sorted out, whether the mall is a plant, whether the mall is a machinery, whether the mall is a plant and machinery, they have sent the parties back to court. If we have to find ourselves in a similar situation, how do we evaluate what the mall is? Mall, is it plant and or machinery, or is it not? Is it a place where we supply, or is it the means of supply? There are compelling arguments on both sides. But the jurisprudence till now points to the direction that it is not one to be lightly considered. And the implications are so profound that no less than a high court, no less than a high court will have to give it its consideration, whether in each case it is a plant and or machinery or it is not. But we know what is a plant, what is a plant or machinery, whether it is an active asset or a passive asset. We all understand it. Prudence tells us what the answer is. So therefore, I would only submit for you to choose the path. Either you can choose the path of aggressive claiming of credit, mindful of the consequences, aggressively claim credit, mindful of the consequences, or take the alternate route of reading the plain language of the law and comply with the disallowance of credit that is not admissible, that is hit by 17.5c. Mind you, there is not a moment's suggestion that this is not required for business. Of course, it is required for business. Every clause in section 17.5 is required for business. There is not a single clause. Perhaps 17.5h and 17.5g are the ones one could say are not required for business. But all other clauses are required for business, notwithstanding that they are required for business. The policy prerogative of the government is that we don't want to allow credit. If we don't want to allow credit, and that is the resolute stand taken by the government, enacted by Parliament, we will have to see whether we are able to understand what the language is, even if we don't agree with what the policy behind this language is. I will only submit for you to consider. Supreme Court has not rendered a decision, in my reading, Supreme Court has not rendered a decision declaring something that construction for letting out can cheer about. Supreme Court has only tried to present this legal position that construction of an immovable property has a carve out, and in each case one has to examine whether they fit within the carve out or they fall out of this carve out and are denied this input tax rate. So this is the journey that we will have to take, and definitely looking into the authorities that have been referred to in this decision is going to be valuable. Decisions that have not been referred to in this decision will also be valued to illuminate our minds as to how we need to make recommendations to our clients, taxpayers, managements, depending on where we are placed, to make a decision as to where do we go from here. November is not too far away. I think it might not be out of place to say, let's wait, because clarity has to come, and the government is as much interested in seeing to it that there is clarity rather than kick up a storm and say, this is one way to go or that is one way to go, and that's the final word as far as what needs to be done. Because we find in GST, So many things have been thought through. Their implementation has been regularly refined to make sure that the policy thinking does not slip through the gaps of procedures. And government has very diligently and swiftly announced their thinking, made it clear as to what should be done, gone ahead and walked the talk, made those amendments with the procedures of getting council to make its recommendations after extensive deliberations. Friends, I think it's very clear as to what we read the plain language of the law to be, but what the decision says is also very clear. They have not provided us the answer. They have provided us the means to reach the answer. Now it is for each one of us to find out how will we reach to the answer. Ask yourself this question, whether the building that is constructed is the place of supply or the means of supply, whether the construction to letting out is one continuous unbroken sequence of transactions, or are they two different transactions occurring swiftly, one followed by the other. I thank all of you for your participation, and team Taxman for putting this evening's deliberation together at such a short notice. Thank you all very much. There are two questions among the others that are interesting. In the time available, I'll try and offer an answer. Permanent reversal and temporary reversals are only through a circular. Can it be really binding for not availing credit? Claiming credit or not claiming credit is subject to 16.4. Now 16.5 also. So therefore, we have to answer this question with another question. Are we within 16.4 or are we outside 16.4? That has to be answered. Decisions regarding validity and applicability of 16.4 were sort of lost flavor with the taxpayers because of the amendments that were introduced in this Finance Act and the relief that came in via 16.5. The relief also, mind you, very clearly restricts it to the first 3 years that we see, and November 21 was the last date. So today to go back and salvage credits of the last 7 years might be a tough ask, but this is something for you to please consider. Another question is, what if ITC is reversed voluntarily, but based on a query by the department via DRC3 and not via 3B? Friend, let me just leave this for you to consider. If it's out of the credit ledger, it's out of the credit ledger. It cannot be out of the credit ledger, but still somewhere in the vicinity. Therefore, if you please consider what decision you need to make, examine place or means, continuous transaction, or a broken set of transactions occurring one after the other. See that there are no further questions. Over to Team Taxman. All right, I think that's a wrap. Thank you all for joining this evening, and we look forward to see what new changes government may propose or what clarity government may offer for taxpayers to find relief from this very pressing and very significant issue that has a profound bearing on business. Thank you all very much.